Hello and welcome, everybody. A special edition Friday afternoon. Should you buy commodities live event? I'm joined by none other than Jason Pers, head of FIC here at All Star Charts. How are you doing? Happy Friday, my friend.
Hey man, doing good. Always excited to get on with you and talk about some stuff in the markets. Been a lot going on lately, so there's a lot of stuff to talk about. So this will be exciting.
There's nobody in the world I would rather talk to about the bullish opportunities in commodities markets. There's always something going on. Jason covers FIC commodities, or I'm sorry, fixed income commodities and currencies for us at All Star Charts. But I think my favorite of those asset classes, it's got to be commodities. It's the most fun. Am I wrong?
Oh yeah. There's so much going on, and we get into all the individual stocks in that sector. You're talking about lithium miners, we're talking about gold miners, silver miners, palladium and platinum miners, copper miners, uranium, you name it, we cover it here. And we're starting to talk a little bit about energy lately. I even see you guys talking over at Breakout Multiplier about energy a little bit too. So this is getting exciting.
I'm going to hand it over to Jason, but just in 1 second. We're starting right here because this might be my single favorite chart in the market right now. Basically, what we're looking at is a forever base in the large cap energy sector spider XLE. And in the lower panes here, you have a volatility squeeze indicator, the Straz indicator, showing that we haven't seen volatility this compressed in years. Right, we saw a similar setup before we got the massive run up off of the 2020 lows. And at the same time, the monthly momentum indicator is about to give a very, very powerful buy signal, right? So we have one indicator saying volatility is as tight as it gets, it's about to explode, and another indicator telling us look for that volatility explosion to come in the form of upside momentum, right? A big breakout of this major base. It hasn't happened yet. I think we got to see it. It's been slow, the action and energy, slow and sloppy like most things for the past few weeks. I think we're right on the brink, though, of something really big here. Where's your head at?
No, I think so too. I mean, this is part of the reason, this chart came up and I was like, man, this is such a great chart from you, Steve. Like, love this chart. And it really kind of says everything that needs to be said here, which is, when people look at volatility indicators, Steve, and you probably get this question all the time, is why isn't this always working? When it goes low, why doesn't the price always go up? And the answer is volatility squeezes just tell you that the price is in a tight range. What it does tell you is a big move is coming. So you got to use your technical analysis to get into that big move, which is why we keep highlighting these levels from 2008, 2014, and today. When we get above those levels, I think this thing's going to take off. And I don't think it's going to look back, Steve. I think this thing's going to take off, and it's just going to go out to the stratosphere. When you look at the monthly PPO cross getting ready to cross, you look at this indicator, the Straza indicator, looking at this like breaking out, like it's a Bollinger Band squeeze breakout if I've ever seen one. This is going to happen. It's going to happen soon. Really like it.
And one more thing that stands out, just looking at this chart here, I'm a big pattern guy, and it's all about the underlying trend, right? Which way is a pattern going to resolve? And so in the case of XLE here, we have a multi-year sideways range, big rectangle right at the upper bounds of this massive base. Well, how about the leg coming into that rectangle? It was a straight line higher off of the 2020 lows, an absolute killer uptrend phase, right? So we've digested these gains for several years now, 3 years. I think we're ready to go in the same direction that we came from. And look, it's more than just energy. So this is the Jefferies Commodities Index, Reuters Jefferies, the CRB Index, zoomed all the way out for as long as forever. And you just don't get setups like this every day, right? I mean, it's as tight as stuff get. It's as tight as things get here, coiled up in a similar fashion to energy. What do you think about this one?
No, I love this one. This is one of my favorites, one of the go-tos I've been highlighting for a while, which is the idea that, you're seeing the whole complex. Now, CRB is mainly weighted in energy, which is the reason why it's not skying high with the rest of the commodities complex. So because it's mainly weighted in energy, it's held under a little bit of pressure lately. However, at the same time, yes, it might even be more. Sometimes it just varies around that zone. But once again, it's so heavily weighted in that gold isn't going to really lift it up, that silver isn't really going to lift it up, or copper isn't going to lift it up. So looking at it that way and going, okay, this thing is held up really well. and we're kind of seeing higher highs, higher lows within the short-term trend. The long-term trend, like you mentioned earlier, Steve, which is we're seeing this primary uptrend in a flag pattern. This is probably going to break out to the upside, and it's probably going to be a violent breakout when it happens.
Look, it's a textbook continuation pattern for as far as my eyes can see. Heating oil. What's the signal here? Getting back
Yes.
to energy.
This is exciting. This is an exciting one. Rick keeps shouting this one out. You know, I keep talking about heating oil leading the way. And if you see this massive divergence in the distillates, it's kind of like looking at the mining stocks and like the underlying thing of gold and going like, okay, gold is moving up, miners are moving up quicker. It's kind of showing you there's a little bit more risk on in that environment at the moment. So I do think that this is a bullish sign for the energy complex that we haven't really seen. Like, it's held up well all year, but we haven't really seen it break out, make new 52-week highs. Now we're doing that. Now I'm kind of thinking, you know, if you look through the whole sector, there's so many reasons to be bullish now. And this is also one of them. It's also the reason why you're seeing the refiners lead the way at the moment, because if in this type of scenario where the crack spreads are widening, meaning the distillates are making more money than crude oil itself, you're going to be in that scenario where the refiners start to really take off and don't look back. So I'm excited to see where this thing ends up.
And look, you don't need much here at this point to break out this chart of oil and gas stocks, right? It could be as simple as crude oil digging in and starting to look more like heating oil, right? Just narrowing that divergence a little bit, reverting higher, closing that gap. That could be all it takes. Putting crude oil, 10% higher to break out, you know, a tight chart like this in energy. So I think we're set up beautifully for a big pattern resolution. Fed funds, bonds.
Let's talk about it. So here's one to talk about, and this chart basically highlights the differences and the divergences that you see in the long end of the curve and the short end of the curve. Now, as we all know, or some people don't, the Fed controls the short end of the curve, meaning 3-month bonds. We used to call them euro dollar bonds. Now we call them LIBOR rate bonds. So that's the short end of the curve. And so basically the gold line you're seeing is the short end of the curve that the Fed can control and manipulate. Now, the long end of the curve, the Fed can't control and manipulate unless they do yield curve control. Quantitative easing puts a lot of pressure on the long end of the curve. But at certain points, it starts to say, hey, Fed, you might be making a mistake here. 2018, they were making a mistake by raising rates. You got the scenario where the market just started crashing down. Next thing you know, December 26th, Powell came out and goes, oh, we're finally neutral, you know, which right before that, he said, we're a long way from neutral. So then the market bottoms, moves up. They pause rates. It never really looked back the rest of that year. And then get to 2020, you start to see that divergence after they basically give everybody with a pulse money, whether you were a business, you got the PPP loans, whether you're a normal person, you got the unemployment plus benefits, you name it. There was a lot of stimulus out there, not to mention quantitative easing. QE infinity is what we called it back then. And pulling rates all the way to zero. So at that point, it started to tell you, hey, inflation starting to tick up. And next thing you know, they have to raise rates to fight inflation. Now we're here. Inflation is sticky, but at the same time, they started lowering rates last year. And what happened to the 30-year bond yield? Well, that started to move up. And so when you see that moving up, that's usually telling the Fed, once again, they're making a mistake. And the recent cut, the 30-year started to move up again. So I think they're also making a mistake by making these cuts, not as in a mistake as in I care what they do, as a mistake as they're pulling rates lower in a sticky inflation environment, and it's probably going to lead to higher inflation. And I think energy, international stocks have kind of been telling you that all year. Copper miners have been telling you that all year. Gold miners have been telling you that all year. The last thing we're really waiting to take off is energy. And also, real quick, the long bond yields all over the globe are looking much, much more violent. They're in parabolic uptrends. So if we're looking at long bonds all the way in Japan, we're looking at them in Great Britain. You know, Japan just hit a new high in their 30-year bond. Great Britain's in a massive uptrend and continues to just trend higher. So I think it's a very interesting time to look at energy here, because the bond market is telling you inflation is probably here to stay for a little while. And I think that's going to be very bullish for the energy sector.
It's interesting. I like that you called it a mistake. It's not so much that we care about whether the Fed raises or cuts rates, but these expectations for rate cuts really matter. The selling pressure of the past few weeks, you can't ignore the fact that it's come with a huge decrease in expectations for a cut at the next meeting. So this is stuff that matters. It moves the market, some markets more than others, but it is a really interesting development that right now long rates just keep ticking higher, while short-term rates, shown here in the brown line, really coming down. Now, what happens in the next couple of Fed meetings, we'll see. But the bottom line is when it comes to spreads, just steepening, right?
Yes. So when we're looking at the curve steepening, so there's two different things that you have to pay attention to in the yield curve, and that's a bear flattener, meaning when you're basically seeing
Love
it
that.
move the other way.
Yeah.
So where the green lines are not, for
So they
example.
flatten the bears.
Yes. So it's
Got
called
it.
a bear flattener. And that's when money supply is getting tighter. And when money supply is getting tighter, you usually don't see commodities perform very well in that type of environment, especially not gold. But if you look at this other environment that we're in today, which is a bull steepener environment. So when we have that bull steepener environment where those green arrows are, you're seeing that the gold actually follows the yield curve, because as the money supply is loosening and as there's more liquidity in the world globally, especially because the US is the biggest bond market in the world, you're going to see gold and silver and all these commodities start to move up with it. So this is a great chart, a good one people can take with them and put on their own charts in their own chart book, because I think it's something that's very telling for where we're going to go going forward.
It's a great chart. We were talking about inverted yield curve not long ago. Easy to forget.
Yeah. Well, the inverted yield curve is interesting because even if you look at the bottom of this, where it bottomed out is exactly where gold bottomed out in 2022. So,
Yeah.
and the market also bottomed out at around that same area. I think it was October for both of them. So when you see those bottoms and it moves higher, that's usually telling you this is a good environment for the market. An inverted yield curve doesn't always lead to, crashes or things like everybody is saying, but it's just telling you the type of environment we're in. And that environment being tight money supply when we're in an inverted yield curve. And when we're coming out of it, that's a loose money supply coming out of it, which is very good for commodities. And so that's why we cover so many different things at the Gold Rush here, is because these all work together. I always say it's all one trade, and most of the time it is. And it's like this works together, and you're looking at the bonds, you're looking at bond yields, it ties together with gold, commodities, you name it, the dollar. We can go through it all by using the yield curve.
There's always pockets of strength and different stuff going on in commodities, but this is one asset class. And in the same way that we expect stocks to move with the broader market, we do expect these, various commodities contracts to move with the broader commodities complex. No?
Yes.
And the dollar, quite important to this bull thesis as well.
Yes. So when we're looking at the dollar, it's not to say, hey, in this environment where we have a bull steepener, we will not see the dollar bounce at times. The dollar will bounce at times, especially because it's priced against other currencies, and all of these countries are lowering rates at the moment. So as they're all lowering rates, it's kind of like a race to the bottom at times. So you will see bounces in the dollar. I've never said that wasn't the case, but for me, I just think we're going to continue to put in lower highs, meaning the high we made in 2025, I would be really surprised if we hit that again. I think we'll just put a lower high in here. I think we'll roll over at some point. I don't know if it's today. I don't know if it's in a couple weeks. I don't know if we rally a bit more. But structurally, what I'm looking at in the long run is this is still a very good market for commodities, for gold, and for a lot of these international names at the moment. So if we're looking at that, I think it's just long term, we're probably going to see those continue to trend and the dollar continue to trend lower.
I like the way that you're zooming out, focusing on the primary trend here. You could easily overthink what's going on with the dollar right now. You could zoom in, draw a tactical base, and say this is going higher for now. Jason makes a great point. Maybe that's okay. We just need the primary downtrend to remain in place and a new lower high to be established. And then we're back on to, lower low from there and on and on. And that's positive for commodities.
Yes. And if you look at this, it's the same chart, but kind of inverted to the gold chart, which is now we're looking at bear flatteners. So now you're seeing bear flattener environment. What's happened? Well, money comes out of risk assets. Money comes out of commodities. Where does it go? Dollars. So as it's moving into dollars, this is kind of showing you something. Now, some of these are short-lived. If you look after, 2000, basically that was a short-lived one, but still same environment, same result. And then the longest lived kind of dollar rally that we've seen is the one that kind of went on from 2008, 2009, all the way into 2022 when we made that top. So, as we continue to look at these, I think it's a significant thing to look at here and go, as long as we're kind of in this environment where the Fed is lowering rates, where the long bond yield is being stubborn, we're most likely looking at a weak dollar environment.
And then we most likely want to buy things like not just commodities, but international equities too, right? Dollar denominated assets.
Yes. Looking at these, all these international ETFs, earlier this year, Steve, and even last year, we were talking about this because Steve and I were at the same point because we're technicians. We're looking at the price. A couple years ago, China was just kind of going down into a nasty downtrend. And we were both like, we wouldn't buy China, right now. Oh my God, and then I think it was 3 weeks later, China started to hit new highs and started to have moving average crossovers and started to show some relative strength. And then Steve and I were pounding the table on everybody to buy China, but nobody wanted to. And then China was up, what was it, 30% last year?
Yeah, it was a good year.
Yep. Yeah, so it was up 30% last year, where we started that move this year in the international stocks that coincided with that top in the dollar. So we started to pound the table on all these international names at the moment. And now it's moving into risky areas internationally. If we're looking at EZA, you've got companies like SBSW and some mining stocks in there. This thing's taken off, looks amazing. You got Poland up 60%.
Well, hold on.
Go ahead.
A lot of these country indexes can give you some pretty specialized commodities exposure, right? I mean, base metals, industrial metals are huge out in South Africa, right? So you get a lot of that from this fund.
Yes. And so these are huge in these areas. And same with Latin America. If we're talking about tech stocks and everybody's going, well, I don't know where to go to be out of tech stocks if I just buy ETFs. We're talking about some of these countries like South Africa, most of South America, there's zero tech stocks in most of those ETFs. Europe doesn't have a ton of tech stocks. I'm not saying to avoid tech by any means, but I am saying if you're looking for different exposure to different areas, looking internationally is a hell of a thing to do right now.
Love it. International oil and gas stocks. I mean, the best ones are not in America, is the truth, right?
Yeah, that's the truth, man.
It's a good chart.
If we're looking at that at the moment, we're looking at outside of America is really outperforming, even if you're looking at some of the worst sectors, which energy, even though, we all want to sit here and say energy's been great, it hasn't been great. But internationally, you've had some outperformance there. And that's something that we're not seeing in the United States yet. There's a couple companies that look decent, Baker Hughes and a couple others. But for the most part, we're not seeing a ton of outperformance in oil and gas names yet. Internationally, we are. So I think that's still the area you want to be. I think you want to buy the strongest names in these areas at the moment. And if you have to make that trade, and if not, waiting for the Straza indicator to make a trigger and see that breakout in XLE above 101 or even 98 for the short-term trend, I think that's going to be a very solid way to trade this. Either wait or buy strength internationally.
They're a couple green candles away for the U.S. energy stocks. We need to see that momentum come in. When you look at industrial metals, though, things have been better. You could argue we already have some breakouts in the books here. No?
Yes. I think that when we're looking at this, we're kind of seeing a lot of breakouts across the board, whether we're looking at copper miners, copper stocks, steel stocks, aluminum stocks, whatever you're looking for, you're seeing some breakouts here. And at the very least, you're seeing a lot more strength than a lot of these other areas. Now, copper has been really good. You're looking at, I think XME was up 70 something percent. COPEX is up 50 something percent at the moment. I'm not sure the exact numbers, but just looking at that, we're seeing this strength kind of come into an area that a lot of people have overlooked for a while. So I really like the idea of kind of starting to look at what's next, which is probably steel stocks, probably aluminum stocks. There's a lot of names in the aluminum stock sector, a lot of names in the steel stock sector that have been unloved and hated for many years. And Steve, you and I have talked about these names. It's probably been 10 years since any of them have been worth even looking at. And now we're kind of seeing this major takeoff once again in a lot of these names that have looked like crap for a while. Yep.
Yeah. I've been in the CNX. It's been great. I'm looking at Kalu right now, the Kaiser aluminum. Nice base there.
Mm-hmm.
Yeah.
Yeah, there's a lot of really good ones out there, and that's what we do here more than anything else is understanding the relationship behind the underlying commodity and the actual stock sector or the actual stocks themselves. Because some of these companies, they're profitable with metal prices where they're at. So, for example, let's look at gold. Look at gold. Go all the way back to 2018. It's an easy example. If you look through all the stocks, I think KL is not even listed anymore. Kimberlake Gold. But if you look through all the stocks and you find a chart of KL in 2018, they were making a ton of money in that cycle, even though gold was very cheap. And it's because they were profitable with gold at a very cheap price. Now, if you look at some of these steel stocks, these aluminum stocks, and you look at the prices of aluminum, you look at the prices of steel, now we can get an understanding of where these stocks should move based on the underlying commodity. So that's one thing we do here at the Gold Rush, I think, just about better than anybody else.
Yes. 100%. You guys been all over these trends. I'll tell you one more thing. When I look at the COPEX and SLX specifically, those charts look almost identical to that range we keep going back to in energy.
Yes. Yeah.
Like dead sideways for 3 years, but we've gotten upside resolutions in both of those already. So I think it's only a matter of time until the oil and gas indexes follow and look similar to these top two up here.
No, I totally agree. I think this is a great way of looking at it too. DBC,
This is a
another
great signal.
Yeah.
I mean, you don't get much false signals here in a monthly PPM.
Yes, monthly is. I mean, for me, I'm always going back to these long-term trends. I love long-term trends. I think it's easy to identify the primary trend a lot easier than trying to trade in and out of short-term trends, especially with what I trade. If I was trading options more, I'd be more shorter term, but me trading futures the way I do, it makes more sense. So I do think that this is a crossover that's going to happen, starting to happen already, and we could see where this thing ends up. I think it's just everything that we're looking at here is telling us that energy is going a lot higher, Steve.
It's a great chart. Love this one. How about the RRG here? What's this saying? Goodbye to stocks? Oh my God.
Goodbye instead of goodbye. So,
oh my.
But no, I mean, I'm not saying goodbye to the S&P 500, but at the same time, I don't know. I don't know. Like this is the hard thing to think about, which is, do I think technology is dead? No. But do I think that we could be in a period of underperformance for the big tech names? Yes, that's totally possible. So if we get that underperformance in those big tech names, some people, well, I talk about this and some people, Steve, go, well, I don't know, these have done pretty well. And I always try to come back with, hey, if you look at whether it's gold miners, whether it's copper miners, like, yes, if you're saying like, some of these Mag 7 names have done, 20 to 40%, like we're talking about like a whole sector as a whole in GDX going up 120%. I mean, that's a lot of outperformance. So I do think that outperformance will continue to be in the commodity sectors going forward.
Yep.
And I don't think it's going to be in just big, large cap tech names.
I love this chart. And look, I think it's real. I'm positioned for it. I'm ready for it. I have done so much selling, U.S. stocks, large cap growth, mega cap tech trade. I'm always running, you know me, I'm always running some sort of overweight in my accounts, and it's been energy. I went right to energy. I couldn't find much other stuff, many other places to hang out. There's healthcare, but how much of that could you own? I'm huge in energy. I'm early, but I feel good about it. Charts like this make me feel real good about it.
Yeah, I think it's what we're going to be looking at going forward, and that relative strength. And this, Steve, when we're looking at pullbacks, we're not sitting there and like freaking out on every pullback. We're sitting there and going, what exactly is holding up best? Because what's holding up best usually leads the next cycle going forward. Simply put, if you go back even earlier this year, you go to the Liberation Day sell-off, you'll see the fact that gold miners and gold and most of those held up a lot better than the stock market at that point. The stock market went negative. Gold never did. And next thing you know, gold's the thing taking off and kind of leading the way. So now we're kind of looking at the same scenario for energy.
So I could tell one of the young guys made this one. Shout out Sam. So when moon,
what does it mean?
For us normal investors, when moon basically means when are we going to get that explosive breakout? And commodities, don't be fooled. They're not boring. Back in 2020, off the lows, 110% in 2 years. That's no juice. This is just the spot markets, right? So we can add beta to these themes very easily with the stocks in these spaces, via options markets, Jason trades futures, right? Plenty of ways to do that. 110% in the spot markets is no joke.
Yep. And when you add leverage to that, it gets insane. But yeah, Sam brought this chart up recently, and it looks so good because it's really tells you that whole story where you got that volatility squeeze, that long-term volatility squeeze that doesn't happen much. And when things like that happen, we usually get massive breakouts or breakdowns. However, like Steve said, like we're looking at the primary trend, we're looking at this breakout zone. If you can be patient and wait for those breakouts to happen, there's a lot of money to be made. I definitely think here is a great time to start really looking at those types of trades.
And energy's been dead on a relative basis too. You're seeing evidence that that's turning. If the relative trend could turn and start to confirm some of the upside that we're seeing on an absolute basis, I think it goes a long way in supporting this eventual resolution or breakout that we keep talking about.
I agree, Steve. I totally agree with that. I think it's, we're going to continue to see these relative trends change. And as those change, we want to be more interested. So basically since early October, we've been seeing this bottom out, starting to move higher. I do think that this thing's going to hold up. And what I really want to see to really confirm that is, can we do this to the end of the year? Can we literally, I mean, it's not that far away. Some people will be like, oh my God. So I had a friend tell me that today, like, oh my God, that's so far away. No, we're really close to the end of the year right now. So if we're looking at this and it's holding this type of pattern into year end, especially like this isn't the best seasonal environment for energy. So like it's bucking the seasonal trend. It's telling you all these things. We've been highlighting like the levels that we'd be interested in it, and it's starting to get there. So I really do think watching this here, seeing it hold up through year end is going to be the key for this trade.
So we focused on all the big groups, right? The big subgroups of commodities so far, but Jason and Sam and the guys do a better job than anybody in the world just digging in and exploring every corner, right, of this asset class. There's plenty going on here. I always, see the craziest charts from these guys. Are these tankers? So is this a shipping index breaking out to new all-time highs?
So you've heard of B dry, right?
Yeah.
So B dry is the dry bulk shipping ETF, meaning basically like soybeans, corn, even some metals and so on. And then this is what ships the oil. So this is B wet. So if you guys want to get your girlfriends a present, this is a great ETF to give them. But if you're looking at this one, this is basically telling you like shipping rates are going up, they're breaking out. This is very telling because most of the time when this type of scenario happens, we do get to a bottom in oil at some point. So everybody always points to the fact, oh my gosh, shipping rates are bearish. Most of the time when they're ripping like this, that's when a massive bottom happens for oil. Almost every single time. Think of 2020. Why did the front month contract go negative? Because they ran out of places to put the oil. That's why it went negative. So
this is a great chart.
Yeah, so now we're here once again. Like now, this is at an all-time high. Granted, it's not the oldest shipping thing in the world, so you can look at other shipping futures. There's shipping futures if you guys want to really look at the rates long term.
Multi-year highs tells you all you need to know.
Yes, right? I don't need more than multi-year highs. That tells us a lot.
We've been range bound for a long time for this whole theme, this whole sector. So the supporting evidence just continues to build in favor of an upside resolution for energy.
Yes.
Now tell me about the dry one.
So same thing here. We're not seeing the same type of massive move, but we are seeing very close to a breakout in the B dry. So, we're looking at globally, like I think here is, and these move together. So if we're looking at corn, we're looking at soybeans, we're looking at wheat, like most of the time they move together with oil. So, and granted, if we look at corn and soybeans, they've been dead for a long time. Now they're starting to wake up. Soybeans hit a 52-week high recently. Corn's hitting 100-day highs. Let's see where that thing ends up. But, all of these together are telling me like, hey, the next leg of the commodity cycle is moving. We've already seen the metals move. We've seen some areas of the softs move over the last few years, things like cocoa, things like coffee. Now we're getting to that point where the grains are going to start to move and energy is going to start to move.
So it's interesting because, really since the summer, we've been talking about how breadth in the stock market has really been weakening, deteriorating pretty consistently, steadily, right? Ended up being a pretty good signal now for the corrective wave that we're seeing in stocks. Commodities much different story. Breath, correct me if I'm wrong, has really been improving there.
Yes. So we're seeing more improvement breadth wise in the commodity sector as we've seen breadth deteriorate in equities at the moment. So we're seeing like, corn starting to move higher. We got soybeans starting to move higher. Wheat finally put in a bottom. So if you look across the board, you're seeing a lot of these things happen. Natural gas is starting to rip. That's very interesting because we haven't seen that thing move for a little while now. So natural gas usually leads to an oil move. Putting that all together, it's like, hey, we've got the ingredients here. We just need the match. And it seems like there's a match is going to be lit very sometime soon. For me, that match is that breakout.
The great Jim Cramer has been known to say that there's always a bull market somewhere, and I believe him right now. I think it's in commodities.
Yeah.
Marine shippers.
Yes. So marine shippers, same scenario here as the shipping rates, where you're going to see these things move up usually before that cycle really takes off and becomes like a major trend.
I'm just looking at the names here too. Like this just can't be bearish. Like these are some of
These
the
are junky names
worst stocks in the world. Like,
yeah.
Oh my gosh, I haven't looked at these. Just SPL.
And these are literally, like you said, like these are literally the worst stocks in the world. Like shipping companies actually pay you money. Like you get a huge dividend in most of these companies because they just want you to hold on to their volatile, terrible stock. Like that's the truth. And so like when you're seeing these things move, it's pretty exciting and it doesn't happen much. And these things double quickly and do all types of crazy moves. So we do have some trades on there for our Gold Rush members that have been doing really well already. So we'll see where those end up. Excited about this one though.
No dry ships though. No dry ships.
No dry ships. I mean, there's a couple in there. There's a couple in there.
All right, talk to me about some opportunities. The folks want some charts. We're going to go through some opportunities that are set up right now, as well as some past opportunities, some things that we've been in, just to give you guys an idea of what we do here. This is a name, Imperial Oil, shout out Canada, that I feel like comes up every other day, comes across my desk. The IMO. Look at this one.
IMO is always up there, and it's the one that is really holding up well. I mean, a lot of the Canadian energy stocks are holding up well. This one, CNQ, there's a bunch of really good ones at the moment. So, once again, like we talked about earlier, find the relative strength.
And then, I mean, if you want to play this in U.S. energy, look, if you want to simply buy that chart pattern we keep talking about in XLE, I think you got two really good options right here in the U.S. majors. Chevron, all coiled up. This is a monthly chart. This is a forever chart. Might not look that way. These are monthly candlesticks. You're getting the PPO crossover. And Exxon's really the same way. And if we threw on the Straz indicator or any sort of like Bollinger Band with indicator here, it would show the same thing as XLE. Just, we're ready to explode. These coils are about ready to pop.
Yes, and we're ready to move. We're just ready to move, and it's exciting. Like I'm excited to kind of see this happen. Now, once again, like we've all had a lot of energy volatility before, so I am saying like this is why we keep highlighting this over and over again. Wait for that breakout. Wait for that breakout, wait for that move to really confirm. And what we said earlier, go to those really strong stocks already. If you're buying stuff, if you're buying energy names already, go to the strongest names.
Even if you waited for the monthly PPO, some people would complain and say, oh, that's too slow. Even if you waited for that signal back in 2020, you made 100%. Just trading this indicator, really.
Yep, exactly. And it's a great indicator. Shows you the trend. Crack spreads. So, crack versus S&P 500. So basically we're looking at the refiners here. These are showing the most strength. So if you're going to go into that area early, like that's the area I would focus on, which is the refiners. And you usually see these move first, and then next you'll see they start to underperform. And then you'll see the big names, the large cap names start to move. And then you'll see these small oil services companies and so on, which are actually showing some strength already. And then you'll see the explorers, which is things like XOP. That'll probably be the end of this cycle. So we're going to probably cycle through these as time moves on, but I definitely like the refiners here the most.
They say crack is whack, but all I can see is that crack is leadership.
Crack is leadership, and leadership is on crack. So I mean, put that together and we've got a recipe for a signal.
Look at this pace. Just great. Really good. But really, early cycle leaders, right? If this is going to be some sort of big breakout in energy, these guys are leading the way right now.
No, I love this. I think this is a great move higher. I think this is just a continuation. Like this is going to continue. I can't see this really rolling over on its head, and I think it's going to drag that whole sector with it. We just got to be patient here. You know, these are the ones that usually move first. So be ready for what's going to move next. And so I think that's going to be XLE, especially in the United States.
Now, how about some of the more like niche corners of the energy market? I know that they classify these coal stocks as materials. This is really energy to me.
Oh yeah. Yeah, and we're looking at coal. Like this is the thing I keep thinking about, and I'll end this quickly, which is if you look at gold miners moving, you look at silver miners moving, palladium and platinum miners moving, you're looking at copper miners moving, steel stocks moving, aluminum stocks are moving, uranium miners are moving, lithium miners. Like you could go down this list. There's all these names, and now coal. Like,
Yeah.
how exactly do you think that a scenario comes into this market where energy just lays flat for the next year? Like, I just can't see it. I think they're all energy will follow these. And I think that's just how the cycle usually works. That makes a lot of sense.
This one's been crushed lately, right back to a key level. It's just the textbook retest now.
Yep. See where it ends up. I think unless these things all get sold off in a liquidity crunch, which I do not think we're in a long-term liquidity crunch at the moment, that would be the only thing that would change my mind on this. At the moment, they start to hold up. They start to show some relative strength once again. I think that's very bullish for this sector.
If Warrior Met Coal digs in, holds the shelf of former resistance, trying to turn into support in the low 70s, I think that's a great entry. 73 gets you 112. Now, give us some of the greatest hits. You know, this is what Jason does all day. He finds stocks like Anglo Gold Ashanti. I remember Ashanti.
Yeah, there's a bunch of good ones in here. And, you know, Sam and I are always putting out great names. So you guys get our picks on Monday. You get a new stock trade every Monday in the gold mining sector, usually silver miners and so on. And then Fridays, you get one in the commodity sectors. This could be a futures trade. This could be a stock trade. This could be a bunch of different things. So this is one of the ones from the gold mining list.
Yeah, this isn't like environment specific either. You guys are doing this all day, every week.
Yep, every week. We've got all types of stuff to do. We go long, we go short, you name it, we're doing it.
All right, so tell me about this one. You guys bought the base breakout, 38.5. I mean, just perfect here. Textbook. Boom. Yep. Here's what happened next. Not one target hit. When these things go, look out. This thing went from 20 billion to 40 billion fast in market cap. 2 targets hit. Quick double. Pretty quick, no?
Yes, quick double, pretty quick. Big move. I mean, this is what we're kind of seeing throughout the sector. Like we have so many trades that look just like this, Steve. Like we have trades that are getting, you know, just maybe not as quickly, but some of them are getting to 300%. These huge moves are happening in the mining sector. We've been crushing it all year long with tons of great trades. Very low win rate, but that's because the whole sector is moving in such a way like, you know, we haven't seen before. This isn't something that most of us in our careers have seen. Me early in my career, I did see it. But you know, not enough to know enough about trading to really take advantage of it like I wish I could have. Now we're taking advantage of it. Now we're taking all of these trades.
I really like this next one. This is my pattern.
Yes.
Rounding bottom, a little base on base. Ooh, wow. Perfect textbook bearish to bullish reversal. $6. This was a $3 billion stock when you guys covered it back in February.
Yep. Now we're moving higher. You know, we buy these. We love to buy these volatility squeeze breakouts, and then next thing you know, we're just taking off to the upside. We're not looking back. Very quick move to our target. You know, this was a big move that happened very quickly. So hitting our targets that quickly is great. And so we made a lot of money on these. You know, we're continuing to put on these trades and making a lot of money. And also we should tell you how to manage risk on each of these trades. So you know where the target's at, you know where stop levels are at, and so on. So this is a great trade here.
And I'm sure people are watching this video and wondering, well, were they in the best commodity stocks this year? Were they in the biggest, craziest trends of all? Mm-hmm. We are no stranger to the trends in rare earth metals right now.
Yep.
So this is the U.S. antimony, UAMY. This one's been a wild ride.
Yeah.
A lot of rare earths, right?
And some of these become multiple trades. We could be trading this. This is just our latest one, so this is multiple trades in the last couple of years in this one. So this one had a huge move. Now we're getting to that massive zone. Most people are going, I wouldn't want to buy that. We're sitting here going like, it's a bull market. Don't be crazy. We get a breakout, a base breakout. We want to buy this thing, and boom, quick 300% move, very quick. Yeah,
Here is nuts. All right, Jason. Tell them what they're going to get one last time. If they join, they're going to see a lot of you and Sam. You guys do weekly videos, all the trade ideas. What is it?
Yeah, so you get a weekly video that's on Monday with Sam and I. You get our research on Monday, which is primarily focused on the gold sector. You also get the bond report, which comes out every week. We highlight different trades in the bond market. We highlight different ways that the bond market can be affecting the stock market. You also get the currency report. Rick has been doing a great job with that. How currencies affect stocks in certain markets. That's a great report that we put out every week. And then on Fridays, you get the commodity report, which basically puts in all the commodity trade of the week, as well as we highlight a sector usually and kind of go through that sector. We have a great one coming out today that we're working on. But yeah, so you get that every week. And also you get access to Sam and I and anything that you guys need to know. We've got all types of stuff out there when we're looking at the gold mining sector, the energy sector. The thing we do is look at the commodities and then highlight the stocks that are being affected by these commodities. Sometimes it could be in a negative way. Sometimes it could be in a positive way. We have no problem going long or short. Obviously now we're in a bull market in the commodity space, and we're buying basically everything. Well, all of these different sectors at the moment.
You guys have been all over the commodity super cycle. I think a new leg higher is upon us. And that's just the gold rush stuff that you get. If you sign up today, take advantage of today's Fibonacci Day offer. You also get the full suite of All-Star Charts research. So that's going to come with all of our scans, 2 to 100, minor leaguers, young aristocrats, freshly squeezed Hall of Famers, international Hall of Famers. You're going to get all of that, access to the All-Star Charts trade ideas page, 2 live video conference calls per month. We just did the mid-month this week. Technical analysis boot camp, our full suite of educational materials, direct access to the All-Star Charts analyst team, not just Jason and Sam, but everybody else. I mean, you joined today. The deal couldn't be better. We're currently running the quarterly plan 27% off. It's usually $850. How do you think of these numbers, Jason? See what we did here?
Oh, these are great. Yeah, these are great.
618.
Perfect. That was your idea. I think I remember that.
So special, you get to pay the lucky number, and the annual plan discounted even more, about 35% off to the very special 1618. That is our special Fibonacci Day offer. I'm going to check the chat, see if anybody's talking to us before we get out of here. But it is a good deal. It's a good deal.
Oh, it's a great deal. And just to be able to, this is a space that a lot of people don't understand very well. And if you can have somebody that can guide you through it, as you know, I've been through a lot of wars in the commodity sector over the years. I'm a CTA. I still have a fund. I've traded for huge funds over the years. Like, you have somebody that knows how to manage risk and understand what you should be looking at there. So this basically gives you access to that, not to mention all of us here at the All-Star Charts team who have their own stories and their own talents. And so we got one of the best, most talented teams, I think, out there. So I can't see any reason.
Talented. Yes.
I think so. I believe so.
I know.
We have a very eclectic group too. So like, I think it's one of the most talented teams, very eclectic. People are very different, have different
bunch strategies. Of strange fellas staring at charts all day.
I wouldn't say strange besides myself, but like other people, they're pretty normal in comparison to me. But, I'm more talking about myself and the eclectic group, but like mainly saying very different styles. A lot of people with different styles, but at the same time, we all look at price over everything else.
And we're lucky, right? Because we don't miss much with such a great mix. The chat thinks we're funny, Jason, and I agree. They liked your joke about the dry wave be wet shipping fund. A shout out for Canada, Steve Dry Powder Strass. I thought that was funny too.
I like that. Yeah, that was.
They want to know what you think about copper miners. We touched on it briefly. Yeah. What's the look on copper miners right now?
Copper miners are great. They're where, I think you want to be if you're looking at the next leg. Energy is the one that's like, I don't know. I'm 90% sure like this thing's going to move, but I'm going to wait for that breakout. But copper miners, they're already moving. I think they're buys across the board.
They are. Freeport's the only crummy one, frankly, but I'll bet you there's a big catch-up trade there too. Big range there as well, similar to some of these energy stocks. Jason, would you consider the suppliers to the oil market, so oil and gas stocks, to be a better opportunity than purchasing crude oil itself? Great question. Thank you, Richard.
I think crude oil itself right now is not the trade. Crude oil itself looks like crap. Always go to the charts. Look for, breakout moves, look for flag patterns, however you do it, your mean reversion trade or whatever, however you do it, but look at the charts. The charts for crude oil don't look good yet. I want to see that really perk up. Commodity wise by itself, I am interested. I do own heating oil. But besides that, we're looking at the refiners. We like the refiners the most.
Question about silver. Look, silver has been red hot. Diverse Insight says, have you guys covered silver already? I just got here. Thoughts on silver, Jason?
Yeah, we did cover it. Silver to me it's in an uptrend. There's nothing to do. That breakout, we're above those old closing highs from 2011. Just ride it. It's going to be volatile. Understand it's going to be volatile. You're trading silver. It's going to be one of the most volatile things. So meaning have a small position based on your portfolio. So if your portfolio, let's say it's something like $100,000, just make an easy number. You want to use like something like $3,000 of that, $4,000 of that, even $5,000 to really trade that. Like that's as big as you want to go. So you can have a wide stop. You can give it a lot of room to run, and then this thing can take off because that's a massive breakout, and it's going to be volatile, but I think it's going to be great.
The point about volatility, I think, is a prudent one. If you're looking to ride this trend further, I think you want to be patient too and understand A, where it came from, right? There's been a big move there, and B, where it is right now. This is a big polarity zone at those old highs. It might need some time to digest, consolidate. This is when we like to say, let them dance.
Nice. Sounds
Austin
good.
Powers. Go ahead.
Yep. I said, yeah, no, that sounds good. Makes sense.
Austin Powers in the chat. Wow. Thank you for joining. Says, thanks for your advice on copper earlier this year. I made some nice money because of you. Also, go Buckeyes, Ohio people.
Nice. Go Ohio.
The live is such good timing. I think so too. That's why we did it.
That's why we're here.
Wish Harminder says he'll catch the replay. That's awesome. What's up, Harminder? What's up, Boopinder? Yes, we made it to the end of the week in one piece. I was joking before we came on here. I said, "Oh my God, it's the last video of the week. What am I going to do with myself these next 2 days?" I'm just so used to just talking all day. But we have fun. Hell yes, Trip Davidson, Straza, and Jason in one stream. We need these more often. Look, this has been a pleasure. As always, Jason, thank you for joining me. Don't miss this offer, guys. Look, you're going to get all the commodities research. You're going to get 100% of Jason, Sam, all of the great work they do, and you're going to get everything else that the rest of the team is doing, all of our traditional all-star premium scans. This is the whole kit and caboodle for 35% off annually. You get Rangefinder 2. You get all the educational materials. You get the calls, 1.618 or 1,618. Sign up now. Any closing thoughts, my friend?
No, I think that's it. I think we went over it. I think it was a lot of fun. Thanks to everybody for hanging out with us. This was awesome. And hopefully you join us at Gold Rush. We do these a lot more. Sam and I are doing videos every single week just for our members with the trade ideas. So if you guys want to get in that, we'll see you guys there.
We had a happy hour a couple weeks ago, and the feedback we got, everybody who loves Jason and Sam and just loves your guys' weekly videos, really awesome. So sign up and get in that room with them. Thank you all for joining us on a Friday afternoon. Have a great weekend, everybody. Thank you, Jason.
Thanks, Steve.